Hey, good morning, everybody. This is Mr. Roxy coming to you live from Palm Beach in Florida. Thought what we can do is take a couple of minutes and explore some places where you could possibly park some of that fantastic profit that you generated from Occidental over the last couple of months, because it doesn't make sense to just leave it alone and let it run and hope for the best. You can do a whole variety of different things in order to protect your gains, including using trading stops, which I covered many times before. For those of you who've been following me, you know that my portfolio consists of a mix. And sometimes I kind of minimize that mix by saying it's sort of 50-50 financials and energy. Well, it's actually sort of more like 40-40 financials and energy, and the other 20 is a combination of a whole variety of different things, you know, like REITs, industrial conglomerates like ICANN and so on. So the bulk of my portfolio, approximately 80% of my portfolio, is split sort of 50-50 between financials, various financials, not just retail banks, investment houses, research houses, and things like that. I have a couple of favorites there and a couple of long holdings. One of them is TD Bank, which is Toronto Dominion Bank out of Canada. Another one is AllianceBernstein, which is a financial management firm out of the United States. I also have some other banks as well. So kind of that sort of bulk of my portfolio, 80%, half of it is financials, and the other half, of course, a combination of energy stocks, including many that we've talked about many times before, like Occidental Petroleum and Energy Transfer and stocks like that. So what I thought to do is take a little bit of time and say, what if you want to buy a bank, right? So what bank do you want to buy? So it's very difficult to kind of pick from all the banks that are available and say this is the one to pick or this is the actual one. But what I'm going to focus on is Wells Fargo, because I actually have a position in Wells Fargo. It's not my largest financial investment position at all. In fact, my largest one by far is TD Bank. I have another one called Scotia Bank, which is slightly smaller. AllianceBernstein kind of fits in between those two, and Wells Fargo is sort of, you know, one of the smaller ones in terms of my financial holdings. But it's one that I might potentially look at adding to. And who knows, you know, this might be interesting for you as well. So let's take a quick dive into Wells Fargo. Of course, it's earnings season as well, so we want to talk about that just a little. And then we'll see what TipRanks is proposing for us on Wells Fargo if you buy it at $50. And then you can let me know in the comments, you know, buy, hold, or run away. So $50 is the sort of current price for Wells Fargo. Now, take into consideration that I'm not trying to time the market. So if I buy Wells Fargo at $50 and it drops to 45 or whatever, it's not a problem. This is what I refer to as my foundational stocks. It's a stock that I would invest in and pretty much just hold for a variety of reasons, but primarily, obviously, I'm getting growth plus a little dividend. It doesn't look like it's a bad time to buy. The 52-week range between $40 and $60, so it's kind of there in the middle. So from a timing point of view, if you think you're an expert at timing the market, I'd like to remind you that you are not. But if you want to look at a whole variety of different benchmarks and metrics and things like that, you can say, hey, you know what, just left of center in terms of its 52-week range is probably not a bad place. Just a short while ago, it was trading at $60. And of course, the financial stocks took a hit. Market cap, this is a huge bank. It's a $185 billion market cap. Earnings per share, banks literally print money. PE ratio under 10, it's cheap. Based on that particular metric, once again, you need to decide what works for you and why you want to get into stock at all. And a little dividend, 2%, not bad. You know, it's better than putting money in the bank. So, hey, that's kind of like a pun. It's better putting money into Wells Fargo stock than what it is to put money into Wells Fargo, the bank. I think the savings accounts, high interest savings accounts, currently pay about 0.12% or something like that on an annualized basis. At least, if nothing else, you can get 2% as an annual dividend yield because it's currently paying $1. Look at this nice little spike on the graph here. Regardless of the fact that the financials have pulled back, Wells Fargo has easily, comfortably outperformed not only the stodgy old Dow, which also includes some other financial stocks, but even the S&P 500. So not too bad over the past 1 year period. You can buy it, as I said, for $50. There's that little peak, and we can see it at almost $60 on February the 9th. So Where are we now? March, April. So just 2 months ago, it was trading at $60. Now you can buy it for $50. Kind of at a glance, it looks like it's on sale. How does it compare to some of its peers? And of course, Wells Fargo is a large US bank, so it would be fair to compare it to 3 other large United States financial institutions I picked: Bank of America, JP Morgan, and Citigroup. Arguably, JP Morgan is one of the best managed banks in the world. It has a fantastic CEO, Jamie Dimon, and he's done a really good job. However, the stock price favors Wells Fargo. Wells Fargo, basically over the past year, has given us a 20% return on our investment, while all the other financial stocks have gone down. So at a glance, yeah, Jamie Dimon might be the superstar, but Wells Fargo is the superstar in terms of performance as of to date, going back 1 year. Now, I mentioned earnings season just a minute ago, and what you need to do is please take a look when you get your proxy vote or when you get the opportunity to vote your shares. Even if you don't feel like doing it, please go in and do it anyway, right? This is Wells Fargo's annual meeting coming up on April the 26th at 10 a.m., right? So just a few days away. Look at the things that are included in the annual meeting proxy vote. A shareholder proposal on racial and gender board diversity. A shareholder proposal on respecting Indigenous people's rights. A shareholder proposal on climate change policy. A shareholder proposal on conducting a racial equity audit. And a shareholder proposal on charitable donations disclosure. You can see my votes on the right-hand side there, so I'm not hiding anything from you. I'm voting against these things because they have absolutely nothing to do with the bank. Unless you can convince me, which you would have a really tough time doing, that the bank, by nature of its entire business and its entire psyche, is inherently anti-gender, anti-race, anti-climate change policy or whatever. None of those things are relevant at all and mean absolutely nothing to me. So please go in and vote your proxy. Even if you want to vote for it, it's okay. Just go in and vote your proxy. Let people know who you are and what you stand for. The shareholder proposal at the bottom here, charitable donations disclosure, I want to vote for. I have no qualms about people publicizing which charities they donate to. The thing I'm going to do here is just take a couple of quick snapshots from Wells Fargo's annual report. Now, you'll notice right at the top there, it says the annual report is 224 pages. So don't worry about that. I'm only going to show you like 5. In 2021, Wells Fargo generated $21.5 billion in net income, or almost $5 per common share. This included a $5.7 billion reduction in the allowance for credit losses, which improved earnings by $1.05 per common share. Banks, especially when they've been hit hard and they're in a decline, and remember, Wells Fargo, if you were paying attention or if you were thinking about it at all, during the pandemic, early 2020 into 2021, you could snag this stock for like $20. So currently, even at $50, it ain't bad. But a bank can literally print money like that, you know? So turnarounds with financial institutions pretty good when they happen. Wells Fargo adds, we also returned a significant amount of capital to our shareholders, $16.9 billion in total. We increased our quarterly common share stock dividend from 10 cents per share to 20 cents per share in the third quarter, and then to 25 cents in the first quarter of 2022. In total, we returned $2.4 billion through common stock dividends in 2021 and repurchased $14.5 billion of common stock, predominantly in the second half of 2021, after the return to the stress capital buffer framework. They add, consumer debit card spending also continued to be strong, with spending up 20% compared to 2021 and up 28% from 2019. All spending categories increased in 2021, except for a modest decline in food and drug. That's an interesting little addition there, right? All spending categories increased except for a modest decline in food and drug. People were spending less during 2021 on food and drugs. Drugs I can kind of understand, because many drugs, hey, I hate to break it to you, but many drugs are invented to just keep you on a prescription. They're not going to cure you of anything at all, because the money is in the prescription, especially a repeat prescription. Discretionary spending on retail goods continued to be strong relative to both 2020 and 2019, as customer liquidity levels remained high. Is that a surprise to you? Well, when a major bank says customer liquidity levels remain high, that's a very interesting, positive statement. The strong economy continues to positively impact our customers and our results. consumer financial positions remained strong throughout the pandemic. Did you know that? No, that's a good macro thesis to kind of look at when you're looking at making an investment. While median deposit balances declined during the second half of 2021, after economic impact payments ended, consumers continued to have more liquidity than prior to the pandemic. What are you guys doing with all your cash? Are you just hoarding it, sitting on a big mountain of cash? You know, if you sit on a big mountain of cash, eventually it's going to erode. So you don't want to find somewhere to park it. Maybe Wells Fargo ain't a bad one to choose, but you guys can let me know in the comments. Median balances at the end of the year, 26% higher than pre-pandemic levels. Wells Fargo, with its millions and millions and millions of customers, is saying our customers' median balance over the last end of the year is 26% higher than pre-pandemic levels. Another one. In addition, we are beginning to become more active in creating new digital solutions on the wholesale side of our business. For example, we noticed that we are collaborating with HSBC to optimize the settlement of foreign exchange transactions through a blockchain-based solution, which will reduce settlement risk and associated costs. Let's talk about that one for just a second. So up until about maybe 10 years ago or so, and I'm guessing, so don't hold me to it, but yeah, round about up until maybe 2011, 2012, almost all international banking and all international movement of money was done through a system called HSBC Connect. So HSBC, as the world's global bank, effectively was the engine that moved money from banks to banks. So regardless of, from a domestic point of view, if I moved money from, let's say, JP Morgan to Wells Fargo, or if I moved money, let's say, from JP Morgan in the United States to Lloyd's Bank in London, HSBC Connect was the engine that was driving that. That was gradually replaced over the last few years by blockchain technology, and very specifically Ripple, which is XRP, if you want to be a crypto investor, which I was for a while, but I'm not. So if you play with crypto, it's good if you can understand the utility behind what you're buying, as opposed to just buying sort of whatever the current trend is. And by that, I don't mean to be discriminatory against the concept of saying, I'm going to buy some Bitcoin. If you want to buy Bitcoin, buy Bitcoin. You can do whatever makes you happy. But really what you want to do is you want to look at the actual blockchain technology and the different tokens that are available, and maybe do a little bit of homework in terms of understanding how they work. So XRP or Ripple is that money movement blockchain, which is, I'm not going to say replacing HSBC Connect, but it's gradually moving sort of in that sphere, because this is a bank, Wells Fargo, which effectively would have been an HSBC Connect customer, now saying we're optimizing settlement of foreign exchange transactions through Bitcoin, a blockchain-based solution. The other one that you can look at, which is quite interesting too, is Ethereum. Ethereum allows you to do contracting, because you can also peg certain parameters on it for your derivatives, like dates or whatever. So you can do contracts with it. So that is great utility too. So if you're a student of crypto, you can help educate me. You can help educate all of us. But if you want to invest in crypto, don't just say, I'm going to take $100, $500 or whatever, and buy Bitcoin. First, do a little bit of homework and make sure you know what it is that you're buying. One more, consumer banking and lending. We serve approximately 64 million customers. So just a minute ago, I said, remember that millions and millions of customers have a median balance of 26% greater in 2021 than what it was in 2020. Banking and lending customers in our bank branch footprint remains a competitive advantage. We have approximately 4,800 retail bank branches with a presence of 25 of the largest city markets in the United States. A Wells Fargo branch, or ATM, is within 2 miles of over half of US Census households and small businesses in our footprint. That's an enormous position of strength. A couple of screenshots here from tip ranks. There's the current price, $50. Rated neutral, 7. It's okay. At least it's a moderate buy and not a moderate sell, or something that's not negative. It's all good there. Down here at the bottom, the market cap, 185 billion, the PE ratio below 10. Those are all things that look to me like a buy. I'm not going to say it's a screaming buy, but it certainly looks attractive as it is right now. Wells Fargo's stock forecast. And what's interesting here is not only the fact that you can currently buy it at $50, and the analysts predict a $62 stock. which is a 27% upside from where we are today. But even right here at the bottom on the right-hand corner, it says lowest price target, $54. So if you bought it right now for $50 and it goes to 54, you're up 10% anyway. Plus you can sock away the dividend. But I think Wells Fargo is more likely leaning towards the going back to 60 than what it is likely to be stuck at around 50. Anyway, the point I'm making here is I would not be investing in Wells Fargo in order to get a 2 or 3 or 5 bagger. Those are different kinds of investments, right? I can take a stock like Occidental. I can manage my Occidental actively. In other words, I don't just sit there passively watching it, and get into a situation where I am today, where my average cost basis is like $12 and the stock is trading at $60. So I got a 5 bagger. And in addition to that, the margin is now so huge on that particular investment in my portfolio, I don't have to worry about it. If it crashes and pulls back 20%, 30% or whatever, that's horrible, but only because it makes me feel bad, not because it looks bad necessarily on my portfolio, because I have some really good locked-in gains, which I can now just effectively hold. Of course, if it were to pull back, talking about Occidental, 20, 30%, I might even add some more again. But right now, I'm comfortable where I am, but I'm actively managing it. So Wells Fargo is a position where I currently have a sort of, let's call it slightly below my median typical investment in my portfolio, in terms of its value, in terms of its weighting in my portfolio. But my average cost base is about $20. Wells Fargo, unlike Occidental, is a stock that I would probably look to adding a little bit to, not a lot, just add a little, maybe buy some more at $50, average my cost basis slightly higher again, see where it goes, and just hold it. So not everything we do needs to be a 20 bagger or 10 bagger, but everything you do should be absolutely focused on wealth preservation, capital preservation, and making sure that you protect your gains, because your paper gains can be taken from you like this, right? So on that note, this is Mr. Oxy saying goodbye for now. It's Sunday morning. It is April the 10th, and I'll be back soon, maybe with some more energy as I work my way slowly through my portfolio to try and catch up and see what's actually going on. See you later. Bye.